Oliver, with the fact in mind that we are seeing some limit moves over here in the meat complex, I'm going to go back and ask that same question of you for the best case scenario, worst case scenario for producers in the meat complex.
Well, we obviously had a heck of a run off of those lows, and I think that was part of the best case scenario. I think there were some concerns when we were down at those lows that we'd potentially see reduced capacity at some of the plants. That obviously didn't happen, knock on wood. We don't expect that to happen, but you can never really rule that out, especially if you have long exposure. You want to make sure you protect for the uncertainty of something like that happening. Nonetheless, we have gotten a good rally. We saw the cash market on fire. We saw the box market on fire. I think that has given producers an excellent opportunity up here for some of the deferred contracts. We were hoping to get a little bit more firm trade here in the April and June to do some selling against, because once this week and next week is over, I think you're going to start to see that cash subside in the box as well. Because the thing is, you've got a lot of these people that have stocked freezers essentially, and you start to see unemployment tick up. That's not going to do enough to fuel the bull here. So I think if we do kind of hold ground here and get a little bit higher price action in some of these deferred contracts, you're going to want to use that as an opportunity to hedge your downside exposure.